Kristen's nuggets of knowledge. Kristen's nuggets of knowledge. Bust a myth. 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 Hey everyone, it's Kristen Maka with Futurity First Insurance Group, and welcome to Kristen's Nuggets of Knowledge. Today is episode 2 of Bust a Myth. And today's topic is going to be on life insurance, and it is one that is very, very close to my beliefs. And since I can't report to you guys from somewhere in Mexico, or rather anywhere in Omaha, my initial plan was to go outside to a park, but can't do that anymore. So we are on a vacation to the basement of my house. And as I said, since this is a topic that's very, very close to my heart, I want to talk to you like I talk to my best friends. So hence why we're down here. I've got my comfy blanket, my comfy couch, the fireplace is on, I've got some hot chocolate here, and I'm all dressed down, ready to have a one-on-one with you. And also wearing my "The Time Is Now" t-shirt, because the time is now to have important conversations, to have close conversations, and talk to your families. We are all in this COVID-19 situation together, and we need to be closer as ever before, even though we can't be close physically. So, the time is now. Let's go grab some nuggets of knowledge, shall we? COVID-19 is becoming such a prevalent part of our lives today. And I know individuals are very concerned with their health as well as their home lifestyle. They want to make sure that their house is organized and well cleaned. Well, you know what? It's a perfect time to then look at your family's financial plan. I mean, all of us agents and financial planners are working. We're considered essential personnel. And you know that there are very, very secure ways to be able to send the information that we need to do our jobs to and from each other. So why not just reach out to your financial planner, reach out to your insurance agent, and make sure that your family plan is in good working order. Now, this is a Bust a Myth episode, and today's myth is going to be about life insurance. And life insurance is a very, very prevalent part of that family plan. I know a lot of people don't think about that and don't see it that way, but when you're studying for your securities licenses, it's in those study books. It is in those tests. It is an important part of your financial plan. Now, when I was working at my previous employer prior to Futurity First, selling life insurance was the bread and butter of my business. And it was difficult. I would run into all of these different myths all of the time. And one of them in particular, which we're going to talk about today, is the myth that it is better to invest the money that you would have put into a life insurance premium into the stock market. Now, firstly, with the way that things are going in the stock market right now, I hope those individuals are thinking twice. But let's run down the list of reasons why I am busting this myth. Reason number 1, a lot of the individuals that I would contact, like over 90% of them that gave me this myth, I'd ask to keep in touch with them. And 6 or 12 months down the road, when I'd finally get a hold of them on the phone again, I asked them if they actually invested the money. And you know what they said? No. Can you believe that? No. They said that they knew it was important for their family to have something in case they passed. But yet they didn't go through the measures to actually put anything in place. All right, so that's part number 1. Part number 2 is I don't have a crystal ball. I don't think you have a crystal ball. I mean, I know I have a good relationship with the man up there and I don't have any deals with the devil, but I have no idea when my time to die is going to come. And I know neither do you. And I want to share this one story with you that proves that. So when I was at that other job, I had a gal that worked 2 cubicles down from me. And she was going through the underwriting process with this client, and he bound coverage through the underwriting He bound coverage through the underwriting process, which is very important for individuals that are allowed to do that. And during the underwriting process, he was in a car accident and died. He had a brand new self-owned business and brand new wife, brand new child, and then all of a sudden he was gone. And if he did not bind that coverage, or if he was one of those individuals that believed it was better to invest the money, his family wouldn't have been in a good spot at all. So very important to get the life insurance in place. Just like that story, we never know what's going to happen. I mean, I sure don't know when death is going to come knocking at my door.
Who are you? I'm Death. Which one of you is Peter Griffin?
He is.
And on the crystal ball note, unless you've had an encounter with your future self and you've given yourself a stock trader's almanac.
All right, Pops, what's the gag? How did you know what the score was going to be?
I told you, it's in this book. All you gotta do is bet on the winner and you'll never lose.
I'm pretty sure that you don't know what the future holds for the stock market. And over the course of the history of the stock market, there's been so many up and downs. It's like a roller coaster. And you can either be like the one guy and be ready for it and just ride it out because you know eventually if you hold on for something over the course of time, it's going to appreciate. You just don't know if when you're taking it out, there's going to be a depreciation.
All right, little pause for the cause. All right, guys, we're only halfway done. Oh, there's more!
Or you could be like that guy there and be absolutely terrified and scared of every single up, down, twist, and turf that the market throws at us. And we don't need that. We don't want that. Our families don't want that for us. I mean, unless you've got that crystal ball, or you can sniff out the money somewhere.
I'm sorry. You smell that? What is that?
What?
What's that smell? The cologne? No.
Opportunity.
No. Money. Okay. I smell money.
Which I'm sure that not many of us can do. Then it's best to invest our money into something that we know is going to be a guarantee. I mean, unless that is you decide to commit a felony, because let me tell you, not many policies pay out if you die convicting a felony. But when we're looking at that financial source for your family, you know, they rely on you in life to provide them with a solid financial foundation. So upon your passing, why don't you provide them with that same financial foundation so they don't have to worry? And what better way to do that is with life insurance. Because with the life insurance, it's income tax free. I mean, the government loves sticking their hands in every single pocket they can to collect taxes. So what better way to pass on a gift to our families, that financial foundation, income tax free? So when we're talking about investing money, you know, people are expecting to get, you know, minimally 5 to 7% or even better than that on some of their investments. Well, just because the fact that we just talked about, we have no idea when corrections are going to happen, and there have been a lot of corrections.
1637, 1797, 1819, 37, 57, 84, 1901, 07, 29, 1937, 1974, 1987. Jesus, didn't me up good. 92, 97, 2000, and whatever we want to call this.
Life insurance is actually a really good investment. I ran some numbers. So for a male, age 35, so not the youngest, but not the oldest, non-tobacco, in pretty healthy condition, can get a 20-year term policy for $500,000. and over the course of those 20 years, spend about $6,000. Now, 20 years, that's quite a span at 35 years old. There's some potential for risk in there. And if something should happen within those 20 years, his family gets $500,000 income tax free. Now tell me that's not a great return on your investment. $6,000 to $500,000? Yeah, I think that's a pretty good payout. And if you were looking at a permanent product, now I know permanent life insurance is a lot more expensive, so let's put it into a guaranteed product. So same 35-year-old healthy non-tobacco user can get a $500,000 permanent product in place and spend about $159,660 over the course. Say he died at age 95, so that's 60 years. His family's going to get $500,000. I know that when you look at the annual interest rate, 3.6% doesn't look great. But over the course of that time, that investment has grown 213%. That's great. To say that that is guaranteed income-free tax income to your family. To me, what could be greater? What could be greater? All right? You know, like I said, the government wants to put their paws in everything. So when you're looking at investing money into the stock market, they're going to get you all over the place if you want to pass that along to your family. So when we're looking at this life insurance and not wanting to invest in it, you want to invest in the market. First off, you have to ask yourself, are you really going to invest the money? Secondly, you want to ask yourself, do I know when I'm going to die? Do I know what's going to happen to the stock market? Do I want the government's paws in everything that I pass over to my family? And, you know, is the price worth it? It very much is for a lot of individuals. So why not look at investing in some life insurance? Because guaranteed that is going to be a very, very prominent part of your financial plan. Thank you everyone for tuning in today. I know this was a very, very raw, very, very heartfelt nugget of knowledge. And I know that it touches on a subject that a lot of people aren't comfortable with. The possibility of their death and in turn life insurance. But it's a very, very important part of a financial plan. So if there was something about this video that you appreciated, you liked, you gained some more knowledge on, please click that subscribe button. Thank you so much for tuning in today. Please stay safe and healthy. Until next week.